A lot of the real hard-hit areas recently bounced as well, retailers, the auto stocks. So it seems as if the market was sort of probing lower, trying to figure out if, in fact, last week's lows were going to be okay. Right now, where we finished with the S&P is just a few points above where we closed a week ago on Monday, which was before that big Tuesday bounce. So I don't think the market did anything decisive today, but honestly, it felt like it could have been worse. It could have felt like the whole index was under stress. Now, the fact that the market was basically flat without financials is a big but, right? Because financials is the one group you don't want to see in free fall when everything else is holding together.
Yeah, and some of the smaller ones in particular, Mike, really selling off. And Mike Santoli, the fact that we opened higher and lost that so quickly, is that a worrying sign or not?
It's a worrying pattern because it has happened repeatedly in the past several days. But, you know, on the other side of it, 40% of all stocks were up today. So I'm trying not to sort of say, same old thing, we're going to go retest those lows right away that we hit a week ago Thursday. But yeah, this is not encouraging action, but I think today was, again, a lot of back and forth. And with earnings coming, that's the kind of behavior you sometimes get, where you have kind of the winners offsetting the losers. So would not be sounding at all clear, but I don't think today was incrementally ugly versus what we've seen the last 10 or 12 days.
But to Wilfred's point, it started off strong. And Michael Yoshikami, that was led by China, a 4% move up in the Chinese stock market. Yes, it's been hammered this year, but it looks like the officials there are getting very active when it comes to trying to soothe investor concerns. And the question is, does that soothe broader global equities like the U.S.?
Well, I think China is certainly going to do what they can to stabilize the markets, but I would really warn against reading too much into a 4% bounce. When you're down 25% and you bounce 4%, you know, dead cat bounces still live, and I think there's still lots of issues in China. You know, the fact that the United States market still was down even though China went up, I think really speaks to, I think, what Mike was talking about. It's really about a wait-and-see game with earnings right now, I think. The market's looking for some sort of push up, and I don't think until earnings come out, there's going to be a push up.
Michael, can you buy the banks at this level?
Yeah, I think so. I think the banks are pretty cheap at this point. You know, they're not getting much credit for their net interest margin. And we'll see what happens in terms of the rate increase. I know Jim Cramer actually came out and said, I think it was today, said that he thought that the Fed probably would raise once this year and then maybe pause next year, which wouldn't be great for their margins, but would certainly be a reasonable thing for the economy, so that would hopefully not push us into a recession with too many rate increases. So I think some of the banks are a reasonable buy at this price, yes.